Welcome to 79th Experience. With us today is our wonderful chairman, Dave Webster, our CEO, Natalie Bellis, and my name's Simon Donoghue.
A lot of the initial questions in my head and from our clients is about how we de-risk as a business.
Yeah, risk is something I hate. I'm sure Nat's got her own views more from the risk aspect, but for me, it's something that I'm very intuitive on. It's all about instinct. But then I back it away, any decisions that I think should be made. I then give it to our board advisors, speak to Nat, speak to Jake and Curtis. It's not about me, I promise you that. I do less than ever in here, which is good because I'm only good at one thing, buying low, and that's my job.
Yep.
You know, so, but I think these days risk is something that we avoid like the plague. We have to. But other people get sold a dream, Simon, and I won't have that because we know more than them anyway. But the point is, I still double check and I triple check to make sure there's no mistakes being made because that word risk has got no place in this company. I don't know what your thoughts are on that, but on how you de-risk yours, what you're doing here now, or wherever. But for me, it's about numbers. But for you, it's more from a framework side or regulatory side, isn't it?
Yeah, I think you can de-risk in multiple ways. If you look at it from a client perspective, first of all, so how do we de-risk the client? Well, we do that through the structuring of the offerings that we put them into or offer them, which would include things like the security trustee. And there's always a lot of confusion around what that security trustee does. And ultimately, everyone thinks they're for the business and they're there to protect the business. And ultimately, they're there to protect the client. Yeah. So they act as the independent party that is servicing the client's, wishes and making sure that the business does what it says it was going to do and, monitors us, audits us. It has regular updates with the board to ensure that we're still on track. So that's one way a client is protected, but equally we protect the whole business by opting into a lot of regulatory frameworks. So, at the moment, we opt into lots of external audits through ISO standards. And what that is, that's an independent party coming into the business with their own agenda. They literally can spot check it multiple times throughout the year. They just turn up and they don't tell you the plan until they're in there. That's the whole point of an audit, being a previous regulatory auditor, element of surprise is the best way to check, and make sure everything's done. So ISO standards, we do legal reviews. We obviously have a huge legal network around us that are there, again, to look at the client's perspective, to make sure they're protected, linking back into the trustees. But equally, we, welcome in legal reviews across the whole division of 79th Group.
What is the role of the trustee? I know you're saying it's to ring fence.
So what the trustee, in effect, would do is, should we, as in 79th Group or one of the products, default, that's where the trustee steps in on behalf of the investors and then ensures that the investors' capital and everything else is repaid and protected in terms of how they manage the clients for us. And to Dave's point, they do definitely, they are a world above what we are working with. But I think that was the strategic move that we took because we ultimately said we want the highest, protection for our clients.
Partnerships like that are very important these days because it de-risks you again because you've got the excellence around you.
And who do you take advice off then when you're de-risking? Because we can talk in a few minutes about how we de-risk the business in terms of profitability and cash flow, but taking good advice is one of your fortes.
Well, I think Nat and I sort of take advice of different people, but we're all under the one brand. If for me, I'm very close to Andy Cole, who's the ex-board director of the HMRC. And that's the highest level of advice you can get and experience you can get. The guy's been doing it 30 years and there's no one knows more than him about your tax advice and blah, blah, blah. We've got expert tax advisors around us, which means a pound worth me with this company is worth more than anyone other company. I'm already 25% ahead because of the way we run our affairs.
For me, I don't take advice. I get written legal opinions. It's like, and it's something that I'm very a strong advocate for because ultimately getting advice, advice is advice. What should I do with this? Should I buy this house? Should I not? Should I buy this dress? Should I not? For me, it's about securing, the advice that we're given. So that's a mandate throughout the company that when we do get advice in any format, it comes legally prepared because that's our benchmark, right? To say that we're using or, continuing down the right path.
You de-risked it.
Absolutely, it's our insurance policy. It's our insurance policy for the company.
And that's a great point, actually. So moving on to that. So obviously, clients that decide to put some money with us, the big question is, are they going to get the money back, and how can you offer good returns on their investment?
Well, it's easy to offer good returns because, as an example, we just bought one asset for, I think, £7.5 million. The GDV on it's about north of 200 with a net profit. Even if the figures move a little bit, I always look at what I call Armageddon position on it. Can we get out of it? Can we break even or just make a few quid? Is that our worst case scenario? I don't believe in blue sky thinking and promises, Noel, because you get let down. So I look at our worst case scenario. So if you look at this site we just bought, which I'm under a confidentiality at the moment, I can't talk about where it is, but it's a £200 million development. We're paying 8 for it. It comes with a current valuation of 15, but I've already got leverage arranged at 11. Well, hang on a minute. I left school at 13, but I know that's a good deal because I know I can get out of that position very quick, and the clients are not exposed ever because I've got a reserve position on it.
And I think just to top and tail that's the real estate, but the natural resources is no different. So we acquired sites at 20% of their value, which you will have seen. It's gone out in the press now. But what people don't see, and they will see over time as we start to release this, is I've already got my JV and funder lined up, and I've got an alternative exit route should I not want to keep them within the portfolio. So although they're very different businesses, the model's the same. So we don't take on an asset without having the exit route confirmed, which typically is us through a different vehicle, such as IPOs, such as different things like that. But ultimately,
or sale or refinance.
Exactly.
We choose what's best, don't we?
And that's exactly what we've done with the assets now that we've got our Guinean and our Canadian assets. We've literally got the JV partners there, which will fund the projects, which will ultimately flip them into the IPO. So everyone always thinks it's we describe it as two businesses, and it is because they have different assets. But in reality, it's just one simple process on both sides.
Good. And I saw a great quote from a New Zealand property investor, and he said a once in a lifetime opportunity comes around every week.
It does.
Yeah. And so, how do you get opportunities? People are struggling to find properties and deals with 7, 8, 9% yield. How come you get opportunities with such profits?
Well, as you well know, I've been doing this 20, 25 years, and you build up a network of trusted people who know we've always got money, always got cash. We can always act quick. We've reserved, exchanged and completed on a deal in 2 weeks. Other people can't do that because they need to borrow at the front end. We don't. We use our own cash at the front end or a combination of our cash and clients' cash. That's what we do. But it gives you that ability to act quicker. It's about speed business. And when I sit in a room with our lawyers, the lawyers are saying, I've got 20, 30 million pounds in my bank right now ready to spend. He's not allowed to lie over that. Otherwise, the chap gets in a lot of trouble or goes to jail, right? The thing is, the other side of that table then know you're really serious, like when you can write a check there and then. So take it or leave it. I couldn't care less. I mean, if you want to go and chance your, go with someone else and take a chance, sorry. Good luck to you if that works out, but often they'll fail because they'll be in the promise of a third party. We don't do third parties. We're in control of the whole business.
Good. And I think coming back to that example you gave where, a lodge park, you're buying it for a low cost, great GDV, great profits in it. But in order for you to go and get conventional lending, you spend 6 months building a business model and a business plan. And I think it's the liquidity through the fixed income bonds that allows you, gives you that purchasing price.
It's all about cash. An old phrase, and I use that a lot. It's all cash on the hip. It's ready to go. You're loaded. You're ready to go. And that's what we've done. And debt is a wonderful thing if you manage it correctly because it gives you a lot of bonuses in business. If you know you're ultimately going to end up in a profit zone, you've got to have your offsets, your bonuses up front before you go into profit. There's no point earning £1 and giving 65% away. I like to earn £1 and give 10% away. That I sleep better. I think it's great. Our clients are made up with that because, as I said to you earlier, £1 or $1 worth 25% more with me than anyone else because of the expertise we have around us to make sure all the money stays in the company. We're not conventional. We're not normal. We're different.
So to challenge that, if we're cash rich, why do we need investor money?
You look at it from a business perspective for a second, it's scale, right? So the more cash flow you have, the more opportunities we can engage on in a nutshell. So whilst we can do it, it gives you not an unlimited budget, but it certainly grows your budget and allows you to go out and acquire. And that's all that's happened over the last 4 years is ultimately, yes, it could have been rather small and it could have had 2 or 3 projects and just ticked over and had that. But when we saw the opportunity across all the divisions within the business, that's where scale is. And that's where we needed clients to come in and wanted them to come in and, build the business with us effectively.
Yeah, and working on multiple projects at the same time rather than saying, okay,
Exactly.
we'll develop this one and then move on to the next. We can work. The team is big enough to do
We can
multiple.
run them all in parallel. You think right now, assets under management, we're probably running 20 projects, but we've got the ability to now.